She's Suzanne Andreessen. I'm Nate Zielinski, and this is Uncontested Investing. Thank you so much for joining us this week. We have another great episode lined up. Suzanne, we're going to continue that scaling strategies theme. I think it's something that all investors should be tapped into and tuned into, learn more about how they can scale and be successful more quickly. And one of the best ways to do that is creating passive income. And not only creating passive income, but doing so to fund more deals. Where do you want to start with this topic? We can go anywhere here.
Well, passive income is, I think, commonly overlooked in this industry, and I think it's a way for people to, use what you have.
Mhm.
Reduce some of the costs. You may have some equity that you can capitalize on, no pun intended. But use that to really grow your portfolio.
Yeah, it comes down to being resourceful, right? Using the assets that you have, being flexible, being able to fund more deals quickly. It frees up time and mental bandwidth, though. Not only does it allow you to be more aggressive within the real estate market, but it allows you to be a better investor. I think this is one of the whys when everybody gets into real estate investing. They want to have more time on their hands, right? They want to be their own boss. You hear these phrases get thrown around, right? They have more time to do what they want to do, and passive income is the key that unlocks that door.
Well, and it reduces the stress in the transaction as
Yes,
well,
yes.
and allows you to grow your portfolio faster. It's cheaper
Mhm.
because you're not borrowing as
Yep.
much, so you're actually saving money. If you've got the opportunity to do that, I would certainly encourage you to utilize what you have in your back
Yeah.
pocket.
And it creates financial stability between active deals as well. So if you have passive income coming in, you don't always need to be rushing to the table to close that next deal, right? If you have properties that are working for you and you're earning money while you're sleeping, while you're sitting on the couch watching TV, drinking coffee in the morning, right? That's when real estate actually works for you when you have those passive income streams. It allows you to be a little bit more selective too, right? You can go after the right types of properties, not just any property.
Well, it's more flexible, both in the acquisition of the property, but also even
Mm.
you can probably negotiate a little bit more in the deals as well. If you don't have to borrow so much, they have in the conventional funding, if you put 20% down, you eliminate your mortgage insurance. This is almost that same type of
Yep.
concept where you've got some money to put in to reduce the risk for the lender, but also the risk for you as the borrower.
Yeah, I think cutting out traditional financing is a huge step in the right direction for investors. If they can be their own boss and kind of fund their own deals, even look to reinvest in new opportunities, maybe outside of real estate. They always hear about their colleagues or their friends or their coworkers being successful in other areas, but you might not have the capital to make that investment into things that are kind of increasing in value, right? Once you have passive income from real estate, now the world's kind of your oyster in terms of where you want to direct your money to. A lot of times, the smart play is to invest it back into real estate, but you have options now, right? Once
Sure.
you have that passive income.
Well, and it creates buying power.
Mhm.
All of a sudden you have, you know that you've got some capital to deploy, and you can, and maybe you're using your IRA. There's different. You don't have to stick to one finance product throughout your entire portfolio.
Yeah.
You can use an IRA for this transaction, using some of your, passive income in this transaction, and then maybe you have, a couple of funding partners with the private lending. So
Exactly.
it builds your portfolio with a variety of different financing
Yeah.
strategies.
And for a novice investor, passive income might just sound like, okay, I'm collecting rent from a long-term rental property. That's where we're going to start this conversation. But there's a lot of other types of passive income that investors can really benefit from once they kind of turn over each rock, right? And find new ways to accrue passive income. So long-term rentals, short-term rentals on the vacation side, you have your Airbnbs and your Verbos of the world that have kind of taken the stage and kind of become the brand name in those
Sure.
short-term rental spaces. And then you also have turnkey properties. So that's the easiest, most attainable, and I think most relatable for our listeners for step one when it comes to passive income.
Well, so your long-term rental is gonna have your steady stream of income.
Hmm.
Um, and that gives you kind of the bandwidth to see what is left over after all of your obligations have been met. Can you use that money as a passive income starter for that?
Yeah.
But the short-term rentals, there's pros and cons of that as well. You traditionally have a higher rental rate, but you're also fronted perhaps with more vacancy because
Hmm.
if it's only valuable for summer,
Yep.
so what
They're
it
seasonal. Yeah.
yeah,
Yeah.
so you've got to, you have to look at those things that, where is your market? A seasonal rental in Miami is probably pretty good. But maybe not in Maine. Well,
Yeah.
that's not the case because it snows there. But there's a huge seasonal summer rent
But
for so, knowing your market, knowing how you're gonna use that, but I think it'll help provide, um, good income for
yeah,
you.
and I think you kind of unlocked a strategy there, whether you meant to or not. But for investors listening, right? Okay, find that property that's more accessible to the vacationers in the summer, the people that are looking for that beachfront or beach adjacent property, right? Okay, so from call it May to August, business is booming in that property, and then you can go up to the Northeast New England where we are, maybe even the Pacific Northwest or Utah, Colorado, have a property that's very accessible in the winter, right? So call it September to March, that property is booming. So there's ways to cover up those vacancies within that short-term rental property area, property market, I guess is the best way to say it. You have your standard 30-year rentals where year round a tenant's going to live there, but then on the vacation side, right? Different people like different destinations for their vacation. So having those options
Sure.
can only help you.
Well, and so, but Maine has some waterfront property or lakefront property, but waterfront, ocean, or lake. But you also have in the winter, there's a huge, which I've never done before, but it sounds like a blast, snowmobiling.
Hmm.
And you can go from town to town. There's some cool stuff with that. But also, Maine and New England are one of the states that provide beautiful fall foliage that you don't get in Miami. You don't
Yes.
get that in California.
Yeah.
So people may want to come for a week at a clip to see, the fall foliage.
Yeah.
So that's really how, if I was going to be buying properties, I determine, do I want to do it year round, or do I want to shelter it in the winter and just have it open only for
Yeah.
a summer season?
Yep. And I think it's an important conversation to have because a lot of people can get into that mindset of, okay, if I'm going to get a short-term rental, call it Airbnb or Verbo, it's got to be something that people are going to enjoy in the summer. But really, there's markets that you can tap into year-round where
Sure.
January is just as popular as August can be in some of these states, and New England certainly does see that. Uh,
Hey, we go glow ball golfing in
oh yeah,
Maine.
exactly, exactly. I play in December and January, no shame there. The next one is going to be real estate notes and lending. So you have private lending, mortgage notes, and seller financing. These are all other opportunities where an investor can see passive income.
Well, and private lending is going to be, it may cost you a little bit more, but I think the terms are a little bit more flexible.
Hmm.
They're not as rigid as some of the traditional mortgage loans could be, where you can, maybe stretch a little, and again, if you're a repeat customer at some of these and you've got that partnership, I think they're more willing to give you a better grace.
Yep. And then one of the topics that you have a lot of expertise in, the REITs and the real estate funds. So investors out there that just want to pitch in a little bit of money and see that kind of grow and work for them. This is where the REITs and the real estate funds come in. So obviously those private funds can really extrapolate your returns, right? It might take a little bit longer, but it's that minimal investment to see a long-term return.
Well, and they each have different benefits. The REITs, and again, we see those guys years ago. They were doing scattered assets all over the place, to because they wanted to get 250 assets in Dallas. But now they realize that their optimal position is a 4 bedroom, 2.5 bath, 1,400 square foot, no pool house. So they are now shedding off some of the assets, the scattered sites that are going to try it. And so that's an opportunity for them, from that perspective. But then the private funds, the upside of that is your risk is reduced because you got more people involved
Yeah.
in the transaction. So figure out what path is beneficial to you. Where, if there's a hiccup, that loss as well as the benefit is spread amongst more people.
Yes, for sure. Always important for an investor to consider, right? What's their risk management look like? What can it do to the overall health of their portfolio? Are they in a position to incur all that loss? So, all things to consider when you're looking at these different opportunities for passive income streams. We'll move to a more non-traditional one, but I still think it's something worth discussing and worth considering for investors out there. You have affiliate income and educational products. I can't tell you how many real estate investors that I've talked to. They read the book Rich Dad Poor Dad. The next day, they wanted to invest in real estate. It's mind-boggling how many people have gone on that trajectory. Right, one piece of literature can really dictate their career path, and it's a very impactful book. If you haven't read it, I encourage you to do so. But for investors out there that have reached a certain level of success, consider turning that around, paying it forward, using courses, online coaching, whether that's Zoom or something a little bit more structured. And then you even have books, ebooks, things like that, right? If your process is successful, you can sell that process, and that's another way to accrue passive income.
But you can there's also a piece that we didn't touch on is membership organizations.
Mhm.
You've got your REIAs, that you could have a local REIA all the way up to the national REIA. You've got memberships like the National Rental Home Council, the National Association of Rental Property Managers, National Private Lenders Association. These are all places for you to connect with like-minded folks, and they will help you. And there's a pride in helping, you know, cultivate the younger
Yeah.
and less experienced
Yeah.
investors into someone who has, a better portfolio.
Yeah.
So there's a reward in that. They find satisfaction as you succeed, they succeed.
And certainly there's a monetary angle there as well too. Some of these people that you're now coaching or training up become investors and want to partner with you on deals later in their career. So not only does it come full circle and you're giving back to the investment community, because probably along the way you had something similar where you were trained up by someone that experienced success and that gave you the confidence to go forward. That can come full circle, and then you can be investing with somebody that you trained, 6 months, a year down the road.
But that could also be a natural transition when we talk about an exit strategy.
Yes.
You may have found someone that you truly trust, and as you're aging out, which I'm getting a little bit closer to that than most, but as you're aging out, you may decide, okay, I want to find someone who I can trust now. So right now, I own 100% of the portfolio. Now I've brought someone on an 80-20
Yeah.
split to a 60-40 split. All of a sudden, you're starting to transition where you can step back a little, do a little less work, but still have your finger in the
Exactly.
pie per se.
Exactly. Exactly. Affiliate partnerships, I think, is another important part of this. You can partner with real estate tools or services. There's a lot of companies that offer one-off services that can really help um, an investor succeed. We've interviewed a lot of business owners in this very studio that offer these products. So if you're an investor, you can then go on to these platforms, help train some of the employees or the customers that these real estate tools and services provide, and that's another way where you can see an income stream. Obviously, you're gonna have to work that out on the back end with whoever you're working with, but it's another way where you can use your real estate expertise and have that become passive income for you.
Well, and you've got partnerships, that and we've had a lot of these folks on the show. And again, we're getting ready to head out to a conference. I encourage you all to participate in the IMN Single Family Rental East or Single Family Rental West, because all of the people, the investors, but also all of these products and services that we're talking about through all of the uncontested invested episodes are there in person. So you can find out who do you want to use for
Exactly.
CRM, who do you want to use for inspection, renovation. So find ways to engage other partnerships, and we've seen and fortunately, I think the local municipalities are starting to get behind some of the eviction strategies. But you've
Mhm.
got companies like End to End Solutions or Inspectify for your tenant turns. So find the people that can complement and one reduce your time, but also make it more productive, which is more money.
Yes. Yes. Another outside the box strategy a little bit is going to be owning a business with real estate ties, right? So you're not only directly investing as an investor, but you have property management companies, you have general contractors out there, right? You can start side companies within the real estate industry. So you're still in an area where you're comfortable with. You're not stretching too far outside the box or too far into a different industry where starting a business becomes a severe risk. But if you stay within the real estate industry, you can really flourish with some of these companies that you can start by yourself. And again, another income stream for you as an investor.
And you have management fees. So if you're gonna be maybe you're gonna manage your own 17 assets, but you decided to take on another 12 from someone else. So, from a property management perspective, you can do that. But also, it's freeing up some of the time to be able to, for you to engaging with a property management company, you'll have more time for you to hone your portfolio as
Exactly.
well.
Exactly. So we're going to take our first break of the episode right there. I think we've covered a lot and we still have much more to discuss on this episode of Uncontested Investing. Stay tuned as Suzanne and I are discussing creating passive income streams to fund more deals as a real estate investor. We'll be right back.
See you soon. REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today.
Welcome back to this week's episode of Uncontested Investing. Suzanne and I are in the middle of a good one. We are talking about creating passive income streams to fund more deals. And Suzanne, let's get right into it. We've talked about the different streams of passive income, but now it's actually how to turn that into action and fund more deals. Using cash flow to build reserves for down payments is step one. What else can investors do to help them fund more deals with the passive income they're accruing?
So, well, you can certainly take, the profits of your rent, but you may also have, and I actually want to do this myself, utilizing my IRA. It's my own money. I
Yep.
can invest that into an asset, but you have to, if you're going about that transaction, there are some very serious stipulations on how you have to follow these. So make sure as you're, and certainly talk to your accountant on
Mm.
any of this. But if you're gonna, how you use your IRA, but also how you off-sell from the IRA if you choose to
Yep.
sell that. There could be serious penalties in that.
Yeah, I think you bring up a great point before we go any further. If you're an investor, you're accruing passive income and you're trying to figure out what's the next best step, the accountant, the money manager,
Yep.
a professional like that that has alternative ways where you can spend this money that you didn't even think of, right? It's always, okay, I make money from investing in real estate. Let's invest in more real estate, and it becomes cyclical. But if you have someone out there that can direct your funds into a few different buckets, now you're mitigating risk and you're making so much more money in so many different more avenues.
Well, and I think there's a company called BFG Tax, which is great at this, who focuses exclusively on the investor real estate market. And you want to make sure that you follow, if you've got a depreciation schedule, you need to stick to that. A lot of these
Mhm.
REITs have, they write these assets off within 7 or 9 years, and that's when they start to off sell them. You may have chosen that path as well with your accountant. Understand the commitments you've made from a financial perspective and the boundaries
Yep,
that you set up in the beginning, so that again, you don't want to lose the profit you've made in the form of a tax
exactly.
penalty.
I think the next bullet point here, every investor is going to want to hear about. Working at RCN Capital, one of the biggest questions we always get is, how can I get a better deal? How can I qualify for better financing? Having that passive income, seeing those cash reserves, that liquidity on hand, that's another way. If you keep banking that up, that's a green flag for any lender, right? Okay, this person has more than enough money to fund this transaction. They'll be able to bring more to the table in terms of a down payment. That really has a domino effect, and over time, with more passive income, an investor can get better leverage, better interest rate, and a better deal all around for them as they continue to grow in the investment space.
Absolutely. When you can subsidize your own transaction, however whether you do it in full or partial, you're using your own money to work for you, and that in itself will yield. It may allow you to, double time what your plans were if you really have
Exactly.
enough passive income and accrued more than you really want to hold in the bank. Find another way to reinvest it.
Yep. And then it's compounding that growth, right? So over time, you have one property with passive income, then you can get to three properties with passive income. Once you get in that 5 to 10 range and you have over five properties working for you and giving you a passive income stream, now you can be a little bit more aggressive, find those higher yield assets, those bigger returns on investment. Maybe for the first time, you're doing a fix and flip on a multifamily property. Maybe you're trading a few properties in your portfolio to go after a property with bigger units. So that just makes your whole life easier while still getting more of a return on your investment. And that's all thanks to the slow burn that passive income can provide.
But even by doing that and expanding your portfolio, you're actually reducing your cost of operational
Hmm.
fees. Your maintenance now is spread over 5 or
Yes.
6 instead of 4.
Yep.
So your lawn care is so you start taking that payment and bringing it over 5 or 6 assets versus 3 or 4.
Yep. I think one of the biggest things too, when we're talking about passive income, the investor has to have an elevation in their mindset, right? A lot of times people enter this industry with that employee mindset, but the quicker you can switch that to an owner, being your own boss, being the CEO of your investment portfolio, once you have that, that's when the passive income and the money really starts working for you. You can stop trading time for money, right? Money working for you while you're sleeping, whether that's hiring help, hiring VAs for 24-hour customer service, little things like that, right? Like your money can always be working for you once you make that mindset shift.
And what you wanna do is figure out where is your break-even point? How many assets is it gonna take for me, or how much revenue do I have in the bank where I feel confident to now transition and add to that a management or a virtual assistant
Yeah.
or something such as that. You've gotta figure that out, and you'll know very early on in the game, what once I get to 5 assets,
Yep.
what's my next step?
Yep. Yep. And then it's that focus, right? When we're talking about that mindset shift, it's the long-term wealth versus the short-term wins. And I think hiring a VA, a virtual assistant, is one of those examples. So say you as an investor, you close a deal, but you're up all hours of the night trying to close it. Maybe you're in different time zones trying to close this deal with a lender. You've got all these headaches, you've got all these things going on in your personal life, and maybe you save $1,000 by the end of it. Like, oh, thank God I didn't hire that virtual assistant because now I have 1,000 more dollars. If you hire a virtual assistant,
You would have been
they
sleeping that evening.
exactly. Not only are you saving the time
Yep.
in your personal health, but if you have a virtual assistant throughout the course of the year, like, wow, I made 100,000 more dollars because I hired help. Not those smaller gains, right? It's that long-term vision and that long-term wealth that really stacks up when it comes to passive income for investors.
And we touched on this in, I think it was last week's episode, where fractional employment. You don't have to go all in. You don't have to have a full-time employee.
Mhm.
Find out, and there's a ton of fractional CFOs, fractional CMOs, whatever your need is. There are people willing to take on. And similar to you, there's another investor who doesn't want a full-time employee,
Yes,
but between the two of you, you can probably make it work.
exactly.
So I think there's ways for you to think outside the box on that.
Mhm. Uh, as with every episode, we like offering tools for success for our investors. I think with passive income, the place we want to start here is automated rent collection and accounting, right? So invest in those tools that can help you accrue that passive income without even thinking about it. Accounting software, whether that's an actual accountant or money manager, as we mentioned, or a service such as QuickBooks, something along those lines. Having that tool in place to automate that rent collection can be step one for an investor.
Well, and if you look at, the Gen Z and the younger group, they don't wanna pay but online. That's they
Mhm.
I don't think they know how to write a check, or 2, how to balance a checkbook. And I mean that sincerely, not as a dig,
Yes.
but I think that if you look at, utilizing automation, and you could even, provide services that will also provide additional income, where maybe you have a relationship where you already got your property insurance for your asset, but
Mhm.
maybe you offer renter's insurance and you can get a marketing fee for that. And maybe you offer um, some of the services from a tenant, tenant screening process. There's things that you can actually share revenues with some of these,
Mhm.
legally share them,
Yep.
RESPA compliant, all of that. But I think there's things that you can do to really keep adding to your
Yep.
wealth.
The last two that I want to discuss is going to be a CRM and social media. Both of these tools can be very successful for real estate investors, especially ones that want to get into affiliate marketing where they're tracking the micro transactions, the money that they get from a passive income stream because they did an educational webinar, call it 3 months ago, and they want to see, okay, from that webinar, who is enlisting in this certain service, who is helping me accrue money, little chunks over time. CRMs can be perfect for that. And then social media, you can take education into your own hands as an investor and start making money from that, right? So it can start as free educational videos on Instagram or Facebook, and it can morph into a profit stream for you or a revenue stream for you as an investor over time if you're willing to put in the work, educate the right people, and then eventually you may be writing a book, right? So start something as small as starting a social media channel can morph into a passive income stream down the road.
But that's also another avenue for you to market your properties
Mhm.
too. Where once you've got that virtual tour prepared, you have it housed there, so they know, people can see it. But it's also, I think, myself included, I've definitely become more engaged with social media and searching my interests. And I think that that's how people are going to start to truly find where they want to rent and how they want to invest.
Perfect place to come to an end here for creating passive income streams to fund more deals. We talked about every possible topic within that. So investors should be prepared, whether it's what they do with the money or how they make it in terms of passive income. Investors are set up for success thanks to this episode of Uncontested Investing.
We'll see you soon.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.